Hello, today is the 27th of May 2011. I didn't think I was going to put out a video today, and obviously I have. And let's get on with the market. Market's probably closed or close to being closed as you're watching it. It's 2 o'clock Eastern Time as I'm recording this, and we're looking at the hourly chart, and these Fibonacci levels are quite significant here as the first level or first time that it came up to here, it came towards the 50-day moving average and this level, sold off, and it made a lower low, but really, no, it pretty much made like around the double bottom sort of formation. Not really, however, the same sort of principles. Back again towards this level, and what's really cool is how it has established this higher low, which is very important because it was all right on a bullish case to find resistance at this line again, but bullishly it would need to find a higher low, come back, and thus increase the chances of getting above it. And that's where we are now. There has now been one, two, three consecutive higher lows in a row. When you make a pattern of higher lows, then you're going to be able to draw uptrend lines, and there's really two of them in this direction in here. If we draw a parallel, and I guess that would be the parallel line towards the first one, and in this and here, they usually always work out. It really isn't much of a clear parallel line, but I'm going to connect the top of this trend. If we bounce, maybe we come up towards this area up in here. Again, though, as long as we remain below that line, that does remain that it is in a bearish state. Anything below here is bearish. Everything in this area here is neutral. And everything above here is that of bullish. Shortening this out for less candles, but the same hourly chart. This is another set of Fibonacci levels, which is represented from that $39 high and the lows of 32. And the resistance level here did become support. And since this point in here, the resistance here is now support once again. It's holding above the 1-day moving average. We've still yet to have had a test within the rising 5-day moving average. At some point, we will have it. It's very plausible and not uncommon to break this level, make new highs, and then at some point later on consolidate to test this average, because that's exactly what this level is here, is that of consolidation. Now, as far as the Fibonacci from this high and this low, if we calculate it on this degree, this is what we come up with. And after this massive candle, what's interesting, on the first level, it came right back up to this Fibonacci level and then consolidated there for about 8 or 9 hours. After it broke out, it's now consolidating here for about a half a day, roughly at about the 37.75 mark. Getting above this level, really breaking this resistance mark, makes this to be a failed move, as failures are occurring when you make one direction, in this case lower, and then you get above the second Fibonacci level from the significant highs as well as the significant lows. Yet another test of the 50-day moving average, which should be coming in play very soon. The volatility, this shows you the average movements per hour on the silver market, the blue line representing the average over the last 2 days, orange line over the last 10, really meeting within each other. Will this be resistance and fall lower? Obviously, if the volatility remains low, that should signify the market to be either neutral towards an upward bias. For most of the time, the market sells off. It comes with higher volatility, and that could easily happen. But if it does, we'd probably see this start to go up a little bit higher. As far as the daily chart is concerned, significant Fibonacci level here at $37.67. It's having its second test within this level after finding resistance, pretty much finding the same bottom. and now stabilizing for 3 days within this level. The 18 period average is still declining, and because of that, I have the market set towards bearish. However, it's not going to take much to see this go to either neutral or even that towards bullish. It really needs to get above this level here for me to give much of a bullish conviction towards this market. Alrighty, let's end this video, and I'll be back again on the weekend with some more videos. And on the blog tonight, what will be on there will be some gold analysis. I put some on yesterday, just over the last few years, 3 years, or since the rally has begun in 2008. We'll look at the last 15 or 16 years or so, the gold to silver ratio, but I'll do silver priced in gold. We'll look at the volatility difference because silver's a heck of a lot more volatile than gold has been recently, and then the actual gold chart over the last 15 years. And of course, it's in a superb bull market. Thank you for tuning in, and have yourself a magnificent weekend. Bye bye.